Welcome to our channel. Today is from hopeful homeowners to seasoned investors. Everyone is feeling the impact of this volatile shift. In this video, we'll uncover the top 10 ways speculation and short-term thinking are warping the housing market. Get ready for a revealing exploration of how these dynamics are reshaping property ownership and market stability. Don't forget to like, subscribe, and hit the notification bell to stay updated with our latest insights. Number 10. A surge of real estate investment trusts, REITs. Imagine a tidal wave sweeping through a calm sea, disrupting everything in its path. That's the impact of real estate investment trusts, REITs, on the housing market. These financial behemoths have emerged as powerful players, pooling capital from investors to snatch up real estate with a laser focus on high returns. The problem? This surge in REIT activity inflates property prices, pushing homeownership further out of reach for ordinary buyers. As these investment giants prioritize short-term profits over long-term stability, local markets face heightened volatility, where home prices oscillate wildly based on investor sentiment. This speculative frenzy creates a dangerous bubble that threatens to burst, leaving a trail of economic instability and diminished accessibility for prospective homeowners. Number 9. The rise of flipping and short-term rentals. Picture a neighborhood transformed into a revolving door of transient occupants and investment properties. That's the reality driven by the rise of house flipping and short-term rental platforms like Airbnb. Investors are scooping up properties, renovating them, and flipping them for a quick profit or turning them into lucrative short-term rentals. This constant churn leads to skyrocketing property values and the displacement of potential long-term residents. Communities are increasingly characterized by a transient population, disrupting local cohesion and inflating housing costs. The quest for short-term gains not only destabilizes property prices but also erodes the sense of community, leaving behind a market where affordability is sacrificed at the altar of quick returns. Number 8. The influence of institutional investors. Imagine a handful of financial titans wielding the power to reshape entire neighborhoods. This is the reality with institutional investors flooding the housing market. Hedge funds and private equity firms are acquiring vast portfolios of residential properties, driven by the allure of high returns rather than the need for housing. Their massive buying power distorts local markets, pushing up prices and making homeownership elusive for average buyers. As these investors prioritize short-term financial gains over the well-being of communities, rental prices soar and access to affordable housing diminishes. The influx of institutional capital turns housing from a basic need into a speculative asset, raising critical concerns about the balance of power in real estate. Number 7. The impact of mortgage rate speculation. Imagine navigating a minefield of fluctuating mortgage rates, where every step could lead to a financial explosion. Speculation in mortgage rates has turned the housing market into a high-stakes game, where predictions about interest rate changes drive volatile market movements. Investors and financial institutions speculate on future rates, causing unpredictable swings in mortgage costs that affect both buyers and sellers. When rates are expected to rise, a rush to lock in fixed-rate mortgages can drive up demand and inflate property prices. Conversely, speculation about falling rates can spur a buying frenzy, distorting the market with rapid price shifts. The resulting instability makes it challenging for individuals to make informed decisions, creating a housing market where uncertainty and speculation reign supreme. Number 6. The effect of housing market bubbles. Visualize a balloon being inflated to its limits. This is akin to what happens when a housing market bubble forms. Speculative investment drives property prices to unsustainable heights, creating an artificial surge that ultimately leads to a dramatic burst. When investors flock to the market, driven by the promise of quick returns, they inflate prices beyond their true value. This bubble can burst suddenly, causing property values to plummet and leaving many with significant financial losses. The aftermath of such a bubble often includes a wave of foreclosures, economic instability, and shattered communities. A speculative frenzy that fuels these bubbles disregards fundamental market conditions, leading to a volatile environment where prices swing wildly based on investor behavior rather than actual demand. Number 5. The pressure on affordable housing development. Imagine a developer's dilemma. Should they invest in a high-yield luxury project or build affordable housing for a community in need? Speculative investments have increasingly skewed this choice, with a focus on high-return properties overshadowing the critical need for affordable housing. The pressure to generate quick profits leads developers to prioritize upscale projects that promise substantial returns, leaving affordable housing initiatives underfunded and undervalued. As a result, the supply of affordable homes dwindles, exacerbating the housing crisis for low and middle-income families. The skewed investment landscape creates a growing divide between wealthy and low-income residents, deepening the affordability gap and limiting access to essential housing. Number 4. The role of housing speculation and economic inequality. Imagine a game rigged in favor of those who already have wealth, This is the effect of housing speculation on economic inequality. As property values surge due to speculative investment, those who own real estate see their wealth increase, while those unable to enter the market fall further behind. This growing disparity between property owners and non-owners exacerbates economic inequality, concentrating wealth among a select few. Number 3. The consequences for first-time home buyers. Picture the dream of homeownership slipping further out of reach for first-time buyers as the housing market becomes a battleground of speculative investment. Rising property prices driven by investors make it increasingly difficult for individuals to purchase their first home. The competition from high-bid investors and rapid price increases push homeownership beyond the grasp of those entering the market for the first time. This creates a challenging environment for younger generations and low-income families seeking to build equity and achieve financial stability. The struggle to secure affordable housing forces many to remain renters, delaying financial growth and limiting opportunities. Number 2. The distortion of property value metrics. Imagine trying to navigate a maze with shifting walls. This is the challenge posed by distorted property value metrics in a speculative housing market. Speculative investment and short-term gains can skew property valuations, making it difficult for buyers and sellers to accurately assess market conditions. Fluctuating property prices driven by investor sentiment create misleading valuations that impact appraisals, market analyses, and investment decisions. This distortion undermines the reliability of real estate metrics, contributing to market volatility and uncertainty. As property values become increasingly detached from fundamental economic factors, the ability to make informed decisions about buying or selling homes becomes compromised. Number 1. The long-term implications for housing stability. Imagine a housing market where every speculative gamble and short-term profit chase creates waves of instability and uncertainty. The long-term implications of speculation and short-term gain pursuits are profound, reshaping the housing market and undermining its stability. As speculative investment drives volatility and distorts affordability, the traditional principles of supply and demand are overshadowed by investor-driven dynamics. The resulting instability impacts access to affordable housing, economic inequality, and community cohesion. Addressing these issues requires a shift towards sustainable investment practices and a focus on long-term market health. Ensuring that housing remains a stable and accessible asset for all demands a reevaluation of speculative practices and a commitment to equitable solutions. Thank you for joining us. If you found this video insightful, please give it a thumbs up and subscribe to our channel. Hit the notification bell to stay informed about our latest updates and content.